Yeah, let me give you a context behind the world of trade. So there's around $16 trillion worth of trade that crisscrosses the world every year, of which $2.5 trillion is conducted through what we call as letters of credit. Now, letters of credit is an amazing instrument. It risk mitigates the sellers when they send it to the buyers. They are assured of their payments back. But at the same time, it's actually quite complex. It's archaic. It's very paper intensive and actually can be very costly as well. So HSBC, as the world's largest trade finance bank, we've been trying to see an efficient way of actually making the letters of credit more digitized and efficient in the process. So blockchain obviously fit that bill very well. I mean, there have been many instances of us working or many other banking partners working in creating an efficient digitized trade, but it ended up creating silos rather than an end-to-end solution. So what we worked with R3 Coda and the Voltron platform is to create an end-to-end platform in digitizing trade. So back in May 2018, we did the first transaction with Cargill in importing a soya bean from Argentina into Malaysia, and that was more of a financial supply chain. So we compressed what normally takes 5 to 10 days of financial supply chain to less than 24 hours. And since then, we've been working on other live transactions as well for different sectors and different corridors. But what makes this transaction unique in the Middle East is first, it's a retail sector. And two, it's the first time we're bridging Hong Kong and the Middle East buyers and suppliers. And what we also did was to create a platform where we can actually connect the logistics, the physical goods partners, to the financial side of the supply chain. So this is one of a kind that we've tried. So what came out of this was two amazing things. One is that there is a possibility to interoperate between two different platforms.
And that's been a big problem, right, in this industry, because as you say, the development's been in silos.
It is. So there have been many, we call it digital islands. So there have been many digital islands that's been created, and we never knew that we could actually, how this is going to proliferate in the world of trade. Now, by bringing it together and it working seamlessly, we have now a great opportunity to actually bring all of these digital islands together. So that's one great thing that we saw. The second one is, by connecting the physical and the financial supply chain part, we are now looking at end-to-end supply chain. And what we realized as part of this transaction is that we saw a 40% save in the end-to-end supply chain efficiency, which is big. I mean, I'll tell you why it's so big. Because we are solving a real client's problem here. I mean, this whole project initiated by the client, and it's not a bank trying to fit in a problem, fitting in a solution to a client, but it's the other way around. Why it's so big? So let's take a fast fashion industry. You have, I mean, where replenishing your style or store is very, very important. And in a typical supply chain, if you take 3 to 4 months to replenish your store, that means you have a replenishment of 3 or 4 times in a year. But by compressing that to 40–50% efficiency, you can do that now 6 or 7 times a year.
Right.
And that's a great business growth opportunity. So what ended up being a working capital efficiency project now has become actually a fantastic business growth opportunity project.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.